This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So we're going to go through now and do a little bit of revision on the group statement of cash flows. Now, don't neglect the group statement of cash flows just because you think it might not arise within the exam. Remember, never try and question spot what you think is going to appear. In the groups question, in question 1, part A, there will either be a group SFP, a group statement of profit or loss and other comprehensive income, or a statement of cash flow. So there's 3 potential scenarios that you need to prepare yourself for. Yes, admittedly, the group statement of financial position arises more regularly than the other 2, but that doesn't mean to say that you can neglect the other 2 aspects. So hopefully you've gone through there and spent a bit of time looking at the profit or loss and group accounts. And now we're just going to look at your group statement of cash flow. And to go through and revise your group statement of cash flow, we're going to go through here and use this question, which was called Weston. I think as I record it, it was the most recent group statement of cash flows question. And it was there from March, June 2016. Okay. So hopefully you can download the question paper from the ACCA website and we will go through there and talk through it together. Okay. So how would I go through and approach this question? Well, first of all, I go through there, find the requirement, make sure you read it, that you understand it, and make sure that you allocate your time available to answer this question. So the focus here is just looking at part A, which is there for 35 marks. So you need to allocate your time accordingly for those 35 marks. Okay. Then the actual requirement itself, it says prepare a group statement of cash flow using the indirect method for the Weston Group for the year end 31st of January 2016 in accordance with the requirements of IAS 7 statement of cash flow. So given that you've got a January year end, I presume that this would have been the March 16 question, as January is nearer to March than it is there to June, isn't it? Key issues to go through there and pick up, first of all, is obviously that we are preparing a statement of cash flows. Always helps to know the financial statement that you are preparing. The indirect method you are being asked to use. So when you're looking at your cash from your operations, we are reconciling my profit before tax to my cash generated from my operating activities using the indirect method, aren't I? So looking at PBT, adjusting for non-cash items such as depreciation, amortization, profit or loss on disposal, and adjusting there is it for any movement that you have on your working capital items. It also says that we're preparing the group cash flow statement for Weston. So that therefore will be the parent. Any other companies referred to within the question will refer to either subsidiaries, associates, or parties outside of the group. You've got there your year end January 2016. So this year, 2016, you'll be comparing and looking at the movement from what's happened from the prior year, which is 2015, isn't it? And obviously it's there in accordance with IAS 7. So if you get the question in front of you, let's look at the information that we've got from the start to the end. First bit of information is that you've got a group statement of financial position, 2015 on the right-hand side, 2016 on the left, haven't you? I don't think there's anything untoward that jumps out at you from that group statement of financial position. It looks very similar to what you've seen previously. You're then given over the page the group statement of profit or loss and other comprehensive income. Now, there's a little bit of a difference here from what we've seen in previous sittings, is that the examiner here has split out your profit or loss into your continuing and discontinued operations. So there's going to be some form of examinability here around IFRS 5 and looking at your discontinued operations, but we'll save the detail on that till later on. You've also got the notes, is it there, notes 1 through to 9. So what you need to go through and do within the question is you need to look at the movement on the statement of financial position, reconciling the opening balance, the closing balance, using the information that's given to you within the income statement, or profit or loss, and your other comprehensive income, and also adjusting for any specific information due to that balance in notes 1 through to 9. Okay. Remember, whenever you're looking at the answer or what your answer that you're trying to get, you're looking for 2 things. You're either looking for a non-cash item or a cash flow. Okay, and we will adjust for those non-cash items or cash flows accordingly. Okay, now it's important when you look at the notes 1 through to 9 to know that each one deals with a particular part of the statement of financial position or a particular part of the question. So if you look at the first bit of additional information, it's all about the disposal of a share in Northern. So we're going to have to go through there and adjust for any balances that have been disposed of as part of that disposal. There will be other aspects, and some of the aspects are ridiculously tricky, but the main aspect to adjust for are the disposal of those balances, which are at the bottom of the page. The second note doesn't give you a huge amount of information. I think it gives you 3 numbers, if memory serves me right. Does it give you the profit before tax? Does it give you the interest expense? Does it give you some loss figure as well of 29? And that's all to do with your discontinued operations. So it's a bit more detail behind that discontinued operations figure that is disclosed on the face of the statement of profit or loss. So we will need to adjust for those accordingly as we meet them. You've then got a bit of information to do with the associate. Okay, so there we're looking at share of profits of associate, dividends received from associate. Number 4, I think the key words you pull out straight away are retirement benefit liability. What does that shout at you? Can't hear. Yeah, pensions. So we're looking at IS 19 and pensions, aren't we? So again, we're looking at any inflows or outflows to the pension scheme. We're looking at any non-cash items such as service costs. Part number 5, I think the key word that you pick out there is development expenditure, isn't it? If you're talking about development expenditure, what are we thinking? Yeah, intangibles. So we're thinking there, aren't we? The purchase or the disposal of an intangible in terms of the cash flow. I'm thinking there maybe about the amortization as a non-cash expense. So there's just some food for thought for the time being. The next one, the key word that you pick out there is property, plant and equipment. Surprisingly, a small note there on PPE, could be a lot bigger, but again, for PPE, we're looking at the purchase or the disposal of PPE and the cash impact. We could have some depreciation, we could have some profit or loss on disposal. We'll need to read the detail as we go through. Number 7, oh wow, I'd be steering clear of that. It starts talking about financial assets, so that's everything to do with financial instruments. No thank you. Then you've got something that was just a little bit different, something that was going on there within trade and other payables, so we'll need to investigate that in a bit of detail. And then there is it in part 9, it tells me about the dividends. Now in part 9, I think it's quite clear to see there that it says Weston has not paid any dividends to its shareholders. So within your financing activity, there is no dividend paid to the parent. So that's great. I can cross that out, that there's nothing there to think about. But whilst you're thinking about dividends, don't forget there's also the potential for the dividend paid to the non-controlling interest. Okay, so we'll need to go through and find that a little bit later on. Now that's just a brief overview. I haven't read anything in detail. I've just picked out what part each relates to with regards to the balance sheet or the statement of financial position. Payables, financial asset, PPE, intangibles, pension, associate, discontinued operation and disposal are very much more linked towards the statement of profit or loss. And the key bit on the disposal is to adjust the balances that have been disposed of when it comes to looking at PPE, inventory, receivables and payables. What I would be doing if I was there within the exam, those 3 aspects there, the disposal, the financial asset, the trade and other payables, they are rock solid. They are so challenging. You've got 35 marks, 17.5 you need to pass, so that's 18 marks. You can get it from the rest of the information that's contained there to do with the PPE, the intangible, the pension, the associate. Okay. All right. The discontinued operation is somewhere in between easy and challenging. It's a medium type of mark. But the other aspects, I would expect you to get the majority of them correct. And if you can do that, you'll pass this question easily. The other bit to note there just popped up, didn't it? Note that there is no group statement of changes in equity. So if we were looking for that dividend paid to the non-controlling interest in the group statement of changes in equity, we're not going to find it there, are we? Okay. We need to draw up a T account to work out the non-controlling interest and the dividend paid for the non-controlling interest. Oh, that sounds exciting, doesn't it? Okay. I'm just going to go through and just talk about a general approach to cash flow before we then come back and deal with the question in full. So what you've got there, if you're approaching a statement of cash flow question, what do? Prepare a pro forma. Now, just be careful here when you think about the pro forma and the statement of cash flows. Don't write out every line item. You just need to put in the headings. So get yourself a blank page of paper, and on that blank page of paper, head it up question 1, part A. Be clear to the examiner what part you are answering, and then put a heading operating activities right at the very top. Leave the entire page blank. Okay. You then go through, turn the page over, and at the top of the next page, you put the title investing activities. Okay. Again, leave the rest of the page blank. Okay. At the top of the third page, you then head it up with the title financing activities and leave the rest of the page blank. Okay. You are going to fill in the blank pages as we go along. Then at the bottom of that third page, you could go through there and just put in the cash and cash equivalent at the start of the year, the cash and cash equivalent at the end of the year, and then the movement on your cash and cash equivalents. And then if you wanted, on a fourth page of paper, head it up there with your workings. The workings are important, and I don't care what is done within the model answer provided by the examiner, use T accounts. If you use T accounts, you will demonstrate a better understanding, and therefore you will score more marks come the exam, because the marker will be able to fully appreciate and understand what you have done. Okay? Understand? T accounts. Okay? You're an accountant. Think like an accountant, act like an accountant, debits, credits, T accounts. It's what you were put on this earth to do. Okay? Then what we've got, I would then start answering the question. I will go through there, look for the cash and cash equivalents figure. Starts at the bottom of the third page of your answer. Put in the opening, the closing, and then work out the movement. Okay. Then what I do is I go to the statement of profit or loss and put in your profit before tax figure. That's where I would start. You're looking at the indirect method, so that goes right at the very top of your first page. Okay, just underneath your operating activities heading. Now, just be careful. What we've seen in the more recent cash flow questions within group accounts is that the figure for profit before tax that's in the statement of profit or loss doesn't feed in directly, but it needs adjusting. Okay, so just make sure that you put it in little bracketed workings for the time being. Okay, so PBT brackets your number and then leave it open for any adjustment. Once you've got your PBT figure, what I would do is shrink yourself down very small and imagine that you're there on the exam paper. Okay, yeah, like a little ant. And if you're sat on PBT and your ant looks upwards, what you go through and see there is you see associate figures, you see finance costs, and you see interest income. So you will need to adjust for those respectively. They are non-cash items. You adjust for the non-cash items and then think about the cash aspect. So on your associate, you will be looking for a dividend received from associate. For your finance costs, you're looking at an interest paid. And then for your interest income, you're looking at interest received or dividends received. Okay, so we shall look at that in the detail of the question. But first of all, you look up. Once you've looked up, where else can you look? Down. Okay, when you look down from profit before tax, you see the following items. You see, is it your tax? So with your tax, you can try and start to work out tax paid by looking at the movement in current tax, deferred tax, and linking that to your tax expense. The profit for the year figure might then help you think about some dividends paid. So dividends paid to the parents. You're also given your non-controlling interest, so you can work out dividends paid to the NCI. And then you also got potentially, like we have in this question, other comprehensive income. So is there any adjustment that we need to make to our T accounts for any other comprehensive income? Okay. Once we've done that, I would then go through there and look at your working capital movement. So if you can't remember, inventory, receivables, payables, we need to adjust for. So like you saw within the video on the tuition phase, make sure you put in a working as we showed on tuition. And don't forget as well to adjust for any sub, acquisition or disposal that's taken place during the year. So here, I think within this question there, Weston was it? Yep, we have a disposal. Okay, so you will need to adjust those balances accordingly. Once you've done that, you then need to be very strategic about how you approach the rest of the question. You then need to look at the statement of financial position and what balances that you've not ticked off. Okay. And using those balances, you need to draw up T accounts with the opening and the closing balances, and then use the additional information to try and help you work out, as we said before, either a cash inflow or a cash outflow or a non-cash item. So which ones are you going to do first? It's entirely up to you. I would do the easier ones first. So they are the ones that you're familiar with and have seen many times. So normally pensions and PPE, we've seen a considerable number of times when it comes to just general ACCA P2 questions. And then we also see things that might be small with regards to the information. So again, I think there was a little bit on, was it intangibles? That was reasonably small in terms of the volume of information. So therefore, I'll be looking to do that one earlier than some of the other aspects to do with, was it the financial asset, the trade with a payable aspect, which was horrible, and the disposal. Okay. Once you've done that, complete the workings, complete your answer, guess at bits if necessary, see how you get on, and complete the question. If you complete the question within the time available, the likelihood is you will have passed. If you overrun your time, you're then eating into time that could be used elsewhere, and that time could be used in, first of all, answering part C, which is all to do with ethics, and other easier aspects within the exam. Okay. So let that just be a generic, basic idea of how to approach a group statement of cash flows. The detail we'll see as we go through there and answer the question in full in the following video.